Well, I think that's right, Steve. It's very uncertain. Even if you just look at the labour market data, actually, depending on which part of the US labour market data you focus on, it can become better or worse news. ADP versus payrolls, the Conference Board's Employment Trends Index, you look at average hourly earnings, do we focus on the Employment Cost Index? So it is a nuanced situation in the economic outlook, and it's a nuanced situation in markets. And what's tricky, of course, is that on the balance of evidence, it does look like we are in that soft landing phase now. But the real question is, well, can you stay there? So we're looking at the data on disinflation, the evidence around labour markets and growth, signs of productivity holding up. Those three indicators are really kind of critical to establish the idea of whether or not you can stick the soft landing, which is that's the key question for investors now. And even if you can, well, markets are priced for perfection. A lot of that news is discounted. Sentiment is already very optimistic. And what does the end destination look like? Because we're still dealing with an environment where there's a lot of geopolitical risk. There's an extravaganza of elections this year. You've got real interest rates very high, given high levels of fiscal spending and stagnant growth in Europe, challenges in China. So the end destination point, once we've landed the plane, assuming we can make that soft landing stick, is fraught with challenges and some perils for investors as well. It's not an easy situation, and like you say, it's made even more difficult by the fact that the data is a bit noisy, the news flow is a bit uncertain. Everything feels a little bit tricky at this juncture.
Yeah. Is it fair to say you don't have to get too cute with this market? For instance, if you look at the returns so far, big bets on Meta and Microsoft have really driven the performance of some funds this year. 73% of large cap active funds beat the Russell 1000 benchmark in January. Best monthly hit rate since 2007 by just holding two stocks. So can you just play some obvious trades at this point?
Well, also that's true in emerging markets, Karen. So India was the big winner last year. India stock market was the darling in emerging markets, the big outperformer, huge divergent performance relative to many other parts of the EM space. Continues to be the winner. South Korea was a big performer as well last year. Didn't have the best start to the year, but already last week, better news on semiconductors. Korean market is going again. So some of these themes that we saw last year being important relative sources of performance are continuing again in January. It's good news for economists, actually, because many economists wrote their investment outlooks in November or at the beginning of December, but it still seems to be current because we're talking about the same things. Some of those ideas and trends that we'd seen in relative market performance are persisting. And that seems to be the way things are progressing for now.